At the beginning of this year, I sold every asset that I owned. Given what I've talked about in the past on this channel, things like buying and holding index funds, not timing the market, etc., this might come as a surprise to some of you. And the truth is, I've changed my mind on a number of things, and today I would like to begin explaining how and why. First of all, I just want to point out that this doesn't have anything to do with any current events or any uncertainty associated with them. It has to do with the ease at which you could make money over the past 2 years or so. So I had shared on Instagram, since I wasn't back on here posting yet, I had shared on Instagram that I had sold everything at the beginning of the year. Then on April 9th, when Trump announced his tariff pivot, I also posted on Instagram that I think it was easy as ranking what had gone up the most that day, rank ordering it, and then basically those things were probably going to continue flying the most if we had clear skies for the next 90 days from that point onwards. And voila, here we are back at all-time highs across most things. Prior to all of this, the last time that I did any kind of market commentary whatsoever was back when I was still posting on YouTube. So I believe it was somewhere partway through 2023 or something like that, maybe the spring or summer of 2023. I talked about how markets, and in particular the crypto market, looked a lot like it had bottomed and was basically resuming its or about to embark upon its next bull run, which it did. And almost everything, stocks, crypto, whatever, you throw a dart at something, almost everything is up crazy multiples since then. So that's where we stand, and that's where I would like to pick things up from today. Now, last Monday's video on the meaning of life was a little bit heady, it was conceptual, it was expansive, so I thought it would be nice today to bring things back down to earth a little bit and talk specifically about solving the money problem through the use of investing to be able to multiply our capital on our journey to being a more free and authentic human being in the modern world. And I thought we should talk about this today because, as I kind of alluded to in my very first video back, the way I think about all of these things has changed a lot. The way I personally deploy my own capital has changed a lot. For instance, I don't hold any index funds anymore, and I haven't since 2023. Yes, that is right. I have forsaken the holy religious order of index investing, where thou shalt only buy and hold and never sell, never try and time the market or anything like that. And so again, that might be a little bit surprising given that the previous iteration of my work, Cash College, was all about teaching the basics of personal finance, trying to make them more accessible to people, trying to introduce the concept of index funds as a very simple and reliable way for people to begin investing their money. So I think it's only natural that I should explain the shift in my perspective that I've had. Now, this shift in my perspective comes from a big picture, holistic view encompassing many things. So it will probably take several videos to actually, to explain the whole framework underlying everything here, because everything that has to do with my perspective shift very much extends far out from just the financial layer of the world. But if I could sum it up, it's that I believe everything has changed, guys. Everything. The world at large. Now, it's always changing, of course, right? That change is the only thing that is actually constant in this life. But some changes are much more consequential than others. And I think we are living through one of those consequential changes right now. And one of the ways we can understand exactly what is changing is by looking at markets. Because something has been happening for a long time there, but it's also been accelerating. The change that has been happening there has been accelerating, especially since 2020. And the reason I think we can look at markets to tell us what change might be taking place at a larger societal level is because markets don't just tell you what's happening in the financial world, right? We have to understand that the financial world is downstream from civilization itself. The financial world is a signal about what's happening in civilization itself. I think we have to understand that markets could perhaps be the most truth-seeking mechanism in the world as it exists today. Why could that be true? I think it's true because markets incentivize information processing and truth-seeking more than anything else. How could that be true? Because you get paid to be right and you incur loss if you're wrong. Money, i.e. reward, is perhaps the single greatest motivator in the world as it exists today. And risk of loss or experiencing loss, i.e. pain, is perhaps the single greatest demotivator in the world as it exists today. So you have the single greatest aggregate motivator and you have the single greatest aggregate fear, both embedded in the incentive structure of markets. This is why it is the most mass aggregated information processing and truth-seeking mechanism that exists, right? Markets move before anything else. They react faster than anything else. Markets sniffed out COVID before even the institutional layers of society did, right? And they do this time and time again with very many things. So because markets are this truth-seeking mechanism, they are always saying something to us. Price of something in a market is literally a signal. All we have to do is just listen to what they're saying. This is why I pay so much attention to markets. So right now I think we should ask ourselves, what are they saying? Because I think they are very much saying something. I think we should ask ourselves, why is everything just relentlessly ripping upwards over and over and over again? Why does every downturn always reverse back up to even greater and greater highs, faster every single time? Why does everything go up crazy multiples that seem to be based in no semblance of fundamental reality whatsoever? I think we need to ask ourselves these questions because we need to understand why it is happening. Because this is not going to make sense to somebody who looks at quote unquote fundamentals, valuations, or any seemingly rational way of looking at markets, especially most macroeconomic people, right? I watched so many so-called macroeconomic people over the past 2 years just get absolutely steamrolled while they were either sitting in cash or doing some fancy kind of delta neutral global macro portfolio hedging, all of this stuff, when you should have just ripped it in long, right? You should have just ripped it in long on the riskiest stuff you could possibly find. I used to think all the macro stuff was intelligent, right? It's because it sounds smart. It sounds like these people are highly intelligent, and they may very well be, right? Obviously, there's a difference between intelligence and wisdom. But yeah, it sounds smart. There's a lot of these things that sound smart in the financial world. But the problem is all these fancy theoretical, technical frameworks are based on a world that just does not exist today. Most macro people get their airtime when stuff is going down, right? Because that's when everyone asks, why are things going down? Why are things going down? Let's get the macroeconomic people out on TV to tell us. Oh, I see. It's recession fears. Oh, I see. It's geopolitical risk. Oh, I see. It's the price of oil. But as soon as the market just absolutely melts in their faces upwards, they can't understand it. They might even think it's stupid or that it shouldn't be happening. And so this is part of the reason why index investing actually tends to outperform a lot of these macro people, because index investing forces you to sit in the market despite downturns, because index investing is essentially just this very strong belief that it's always going to keep going back up, right? That's basically the belief you're expressing as an index investor is I'm just going to close my eyes through every single downturn because I'm just going to basically blindly believe that it's just going to keep going back up. And I say blindly, and you could say, well, it's always going back up. You can look at all the history we have here, and that's why we do it. Yes, of course. But also, the funny thing is there's a paradox where people who are index investors also say, well, past returns aren't indicative of future performance. And yet that's also how they explain that, oh, you should be an index investor because look at the past returns, right? So it's just a little bit funny. But basically, index investing is the simplest way to express the belief that you believe markets will just keep going up, right? And macroeconomic people get all excited when it goes down. They get their airtime, but then they struggle to experience the upside. But in the current environment we are in, I have a little bit of a hot take here, and that's that I think index investing is basically the new savings accounts, the new high interest savings accounts, let's call it. It's not going to get you ahead by any means. It's just going to make sure that you keep up with the baseline rising of everything. And I don't mean just assets, I mean the prices of things in the real world. I know that's maybe a little bit of a hot take, so let me explain why I think this. It goes back to the question of why is everything relentlessly ripping back up always in markets? I think everything is going up to ridiculous degrees because the denominator is going down to ridiculous degrees. It's that simple. This is not something that you need to arrive at by being hyper intelligent or by having a fancy model of the world or having an elaborate spreadsheet valuation model of anything. This is not going to fit into a spreadsheet model. It's just something that is very simple and it's very plain to see once you are willing to clearly look at what is just right in front of your face, right? This is not so much inflation or appreciation of assets. It's the deterioration of what they're priced at. I have a lot to say about this, and I'll probably have to do it over several videos, but for today, I just want to introduce you to a way of thinking about markets as it interacts with the phenomenon I've just described. And this way of thinking about markets it's a little bit radical. I mean, in some circles, this is very much a consensus way of looking at markets, but I think that in general, for a general person, this is probably a little bit of a radical way of looking at markets. And so here we go. Everything is a Ponzi scheme. Almost everything, anyways. Now, by Ponzi scheme, I don't necessarily mean fraudulent, although it might very well be. More specifically, I mean the mechanical way it actually functions. I think when you understand markets this way, making money in them becomes almost comically easy. If you don't understand it this way, or you just don't want to, that's fine. You can totally just keep indexing and earn whatever return the S&P earns, but so will everybody else, especially now that indexing is very much mainstream. I think you have to understand that today, as things stand, stocks and coins are mostly just a way for mostly big fish to try and extract as much money as they possibly can before the fiat monetary system resets. And the goal is to then take that extracted money, put it into hard assets, specifically bearer assets, meaning things that you can self-custody, store securely and independently, and do this before that reset happens. All right, that sounds a bit crazy, but just indulge me for a second. So why would that be the goal? Why would the goal be to extract as much money as possible and then to slam it into these hard bearer assets? Well, it's because what you could broadly think of as asset confiscation is only going to accelerate leading into and then be a certainty during this monetary reset that is inevitably going to have to occur. Wealth inequality is already very bad, and it's only going to get much much worse. So what will begin with wealth taxes is going to turn into probably pretty much outright asset confiscation and redistribution. I am not speaking for or against any of these things. I am just saying what I see as an inevitability based on the system dynamics at play here. You know when Gandalf says, "Things have been set in motion that cannot be undone." It's pretty much like that. Now, I don't mean to be alarmist or anything like that. Like, I'm not trying to scare you using words like monetary system reset. It actually doesn't, A, it's not going to happen tomorrow. B, it's not going to be like some sudden cataclysmic event, probably, hopefully. It's probably going to be a gradual thing that's not as dramatic as it sounds. It's going to be this gradual progression of stuff that happens whereby the overturn window is going to shift enough that as it's happening, it's going to seem more or less normal along the course of what's probably going to happen. And this is a very cyclical pattern of history, right? Monetary system resets do absolutely happen. But there's definitely some winners and some losers who emerge out of the other side of it, right? It affects different people in very different ways. And I think we'll talk more about this in another video or across a few videos. Today, I want to more specifically focus on the fact that this way of looking at markets as a Ponzi scheme. And that's because the music is still very much playing. Again, this whole monetary reset thing, asset confiscation, all of this crazy sounding stuff, it's not going to happen tomorrow. But you can see that there is an increase in the desperation and franticness of participants in the market. This lets you know that the tempo of the music, right, it's accelerating and it's now hitting a speed such that the players are increasingly looking to make a fat bag and head for the exits. People are panicking into and out of the market at unprecedented degrees. Look at how ridiculous April's monthly candle looks. Like, it's absurd. It's absolutely absurd. The wick on this thing is nuts, right? It's an even faster V reversal than the COVID panic. It looks stupid. 50 plus years ago, people looked at stocks and all of this very, very differently. And it's very important to understand why, right? This was the era of the Benjamin Grahams, the Warren Buffetts, the people who very much believed in fundamentally grounded investing, right? They very much believed that stocks had intrinsic value and that you could financially model these things. And by doing so, you could find value where other people may not have seen it. Of course, there were still bubbles and there was speculation, but there was still this anchoring belief in the intrinsic or fundamental or real value in the things that people were buying. Today, that belief is eroding, right? Less and less people are believing that. And instead, they're starting to see what a lot of this stuff actually is from a mechanical, gamified point of view. It's all just Ponzi schemes. You've probably heard somebody say, at some point, and I've even said this myself, of course, I believe this, right? That when you buy a stock, you're buying a little piece of ownership in a business, right? It sounds so fun. It sounds so cute when you get started on your investing journey. Look at me, I've bought my little slice of ownership in Apple. I'm so happy. It sounds so cool to say, yeah, me, I'm a part owner of Apple. And while it might be technically true, functionally, it's not true at all. I think we have to understand that there's a very, very, very big difference. There's always been a very big difference between these two things, but today it is just so pronounced because of what is happening. There's a very big difference between technical truths and functional truths. And there's a very big difference in outcomes between people who believe in technical truths over functional truths. Because people who believe in technical truths have been getting absolutely steamrolled for several years now, while people who believe in functional truths, either consciously or unconsciously, are winning, right? And they're winning to the degree that the people who believe in technical truths are getting so mad about it because they think they're smart. And so they look at these other people winning and they say, how are they winning? These people are stupider than me. It's a stupid way of winning. They're winning incorrectly. You can't win incorrectly. It's just the bell curve meme, guys. If you don't know what that is, Google it. Google the mid-curve meme. You have to ingrain this in your brain. We have to avoid mid-curving at all possible costs. So technically, yes, if I buy a stock in Apple, if I have some common shares of Apple, I am a technical collective owner of the company of Apple, right? But functionally speaking, unless I'm going to go out and spend billions and billions of dollars to take a controlling or significant interest in Apple stock, it's not true at all. I'm not an owner at all. My ownership means nothing. If I buy shares in Apple, I actually don't functionally own anything except a number on my screen that goes up or down. But Steve, what about a company that pays dividends? What about voting in shareholder meetings? What about this? What about that? Nothing. It means nothing. Companies don't really pay any meaningful dividends anymore, right? No one's getting up out of bed in the morning for 2, 3, 4, 5% dividends. And the companies that do pay decent dividends, the only people who care about those are dividend investors, right? But they're increasingly becoming a more and more kind of fringe group because a lot of dividend paying companies that pay substantial dividends, they just go sideways or they go down or maybe they go up a little bit. But everything's ripping up multiples. You really want to sit and collect your little 5, 6% dividend? Well, you can easily get 2, 3, 4x's on things. The functional reality is that for the vast majority of investors, especially retail investors, but also a lot of institutional investors, stock ownership represents ownership of nothing more than a number on your screen that goes up or down based on belief. Intrinsic value of a stock is an illusion when there's no intrinsic value in the thing it is priced in. The realization of this is the reason stocks increasingly trade like coins today, right? In the crypto world, there's no false pretense about any of this stuff. Most of the participants recognize that it's very much Ponzi schemes and vaporware, and they're happy to trade it regardless. It's very honest and upfront about it. And so it's no coincidence that stocks are very much starting to trade like shitcoins. Because how does a Ponzi actually work? Well, it's actually super straightforward. The returns of early investors are paid for by the entry of later investors. That's it. This is exactly how the stock market works, right? It's exactly how the stock market works. The returns of early investors in NVIDIA are paid for by the entry of later investors. It's literally how it works. If I buy a stock for $10 before you, and one day you come along and some type of reason possesses you to think it's a good idea to buy this stock for $100, you've paid for my $90 profit. I am exiting the Ponzi scheme because now you're paying for my profits to do so. And now you're stuck holding this bag, hoping that you can do the exact same thing to somebody else in the future. Now, of course, there's all kinds of maybe very good sounding reasons that possess and convince somebody that this is something that they should do, right? Maybe it's a new narrative. Maybe it's the company's profits are going up. Maybe it's a new technological revolution. Whatever it is, there's always a very good seeming reason. But a company earning more profits, a company having a new narrative surrounding it, doesn't actually increase the value of the company from a functional standpoint. It doesn't literally make the price of that company's stock go up. The only thing that can functionally make the price of that company's stock going up is for demand to exceed supply. It's for the amount of money hitting the bid side overwhelms the amount of money hitting the ask side. That's what causes the price of a stock to go up. And the only things that determine this interplay between bids and asks, supply and demand, is belief of both sides. This is exactly how the housing market works too. Obviously, a house has some practical utility because you are a full owner of the house, unlike when you buy a company and you're only a very small owner of it. So it's a little bit different, but it's still very much a Ponzi scheme mechanically. Think about how boomers right now are trying to dump their fat housing bags on the next generation, right? They can only exit the housing market with huge gains if another generation decides to pay for them. The money for the huge gain comes from us. And then we will buy homes and consider it our God-given right to then one day dump our fat housing bags on the generations that come after us, right? And it just continuously repeats. But you don't really want to run the math on this continuously repeating, because then you will very quickly come to the same conclusions I have. You will very quickly get to the point where you see, oh shit, homes are, going above $10 million. You see how asset confiscation, all of these things, monetary system reset, you will quickly see how it's an inevitability. And again, we're not going to go fully into that today. For now, just understand that the implications of all this is that the mask is off in markets. Everything is now honest about what it actually is. Everything is functionally a shitcoin. And the goal, especially for big players, is to extract as much as possible before the jig is up. The only fundamental analysis worth doing is narrative analysis. Who's going to convince who to buy somebody else's bags? This was the single thing that clicked for me to the point where I started actually making money, right? This was the single thing where I went from somebody who mostly indexed, did a little bit of trading, wasn't bad, but wasn't particularly good at it, to somebody who, who it works well enough for. I did not look at a single financial statement. I did not look at any kind of metrics of anything. I turned my brain off in that regard. I tried to get as stupid as possible. And I'm half joking when I say that, but basically I tried to get as close to the first principles of things as I possibly could, right? You either left curve it or you right curve it. You never mid curve it. There's a reason the left curve and the right curve arrive at the same conclusion. And that's because complexity should resolve to simplicity, should resolve to the most simplicity, right? Where it's just not useful or true. For example, back in 2023, you had a lot of consensus narratives that everything to do with crypto is a scam, right? You had some famous tweets that basically said things like, if you're basically saying like if you're in crypto now, you need to leave it and work on something else. Those types of tweets marked the absolute stone bottom. Things like saying Bitcoin was a failed experiment, it's never going to flip gold, anything like that, marked the absolute stone bottom. Tesla is a fraud, it's going to zero, they don't even make as many cars as they say they do, all of these things, stone bottom. And now, what kind of consensus or popular narratives do we have? Well, Bitcoin is not only digital gold, but it's going to flip physical gold, right? Tesla's not a scam. Tesla is actually going to build 1 billion humanoid robots, and humanoid robots are going to be the next big thing. Now, it's not whether or not these narratives are true, right? We're not trying to figure that out so much as we're trying to figure out what people will believe to be true. This is the game now. It always has been the game, but it's just a little bit more obvious now. And that's because I think you have to understand the very basis of society itself is belief. No societal layer of civilization actually exists. Money is not real. Law is not real. Government is not real. The social contract itself It's not real. They have real implications, of course, right? If I were to break a law, I'm going to face consequences for that, right? These collective beliefs we have in these things result in actual real implications of them, but that's only because we collectively believe in them. We mass spellcast these things into existence, right? So then, if money is only real because of a collective belief in it being real, then the abstract things that are priced in dollars, like stocks or coins, are also only made real by the collective belief in them on top of another collective belief. And the reason you see charts that go like the way they are right now, like somebody experiencing a cardiac event, is because the collective belief that the foundation of all of this is shaking. But why? Why is the collective belief waning? Specifically, but not just limited to, our currencies. Because there's no stopping the train of massive deficits, massive devaluation of the currencies. And people are realizing that there's no stopping this train, myself included. I think we have to understand the significance of the failure of the Trump administration at stopping this train, right? Because a lot of people saw this attempt as kind of the last attempt, and it failed. Every time we try austerity, every time we try to salvage the value of the currency, it fails. But when we do attempt to try, people do think, oh wow, are they actually going to do it this time? And so you'll see markets go down because markets start pricing things relative to the way they would be if the value of the currency was going to become more stabilized, right? They say, oh crap, the game's up here. We actually got to return things back to a value where if you had a currency that people actually believed in, then okay, you can invest in the world like it existed maybe back when Benjamin Graham and Warren Buffett were investing. And so you saw markets respond, right? When Jerome Powell raised interest rates, they went down. When Trump came in, he got Elon, he got Doge, this whole Besant went on TV, started saying Wall Street's done really good. We need to realign the economy with Main Street, right? It looked a lot like, oh my God, are they actually going to, balance the budget, reduce the deficit, cut a bunch of spending? Are all of these things finally actually going to happen? And so you saw markets respond accordingly. But this attempt folded so fast, just like any other attempt, right? Elon's gone from Doge. Trump's desperately trying to cut interest rates. He's just introduced a spending bill that's astronomically massive, right? The big beautiful bill or whatever it's called. Nothing stops this train. Every time they try and reverse it, they fail. And markets respond by ripping right back up and through and just beyond, and they go to the moon. They can't do austerity. They have to cut rates. They have to spend more money every single time. Nothing stops this train. And so the markets say, if we cannot believe in the currency, then we are also not going to believe in the things that are priced in it. And I think at this point, things have gotten so crazy, and they may continue to get even crazier, because I think a lot of participants see what just happened as the last try to stop the train. And since it failed just as spectacularly as all the other attempts, everyone is realizing you can't stop this train. Nothing stops this train. And it only runs in one direction. In this type of environment, I think index funds are the new savings account. The broad middle class will be able to use them as a way to keep up with one another, but they will not get ahead. Everyone will feel like they are getting richer because the market will keep going up, but everyone is investing the same way. And if everyone is richer, no one is richer, because notional wealth does not matter. Relative wealth does. At least if the things people want to buy remain at the same general level of scarcity. Like if you had a town where everyone's wealth doubled, but you only increased the supply of homes by 10%, what do you think is going to happen to the value of homes? Everyone in the town is richer on paper, but somehow everything is more expensive. This is why the phenomenon that we call inflation is confusing, because everyone is richer, but everything is also more expensive. It seems like the value of things are inflating, right? When that's not actually what is taking place. And because the gains of the market far outpace the reduction in the level of scarcity of things, this is absolutely true, that if everyone is richer, no one is. And it's actually very wrong here to say everyone, because there is a huge subset of the population who owns no assets or exposure to any kind of markets at all. The lower class is already and will be further plunged into the permanent underclass. This is what will give rise, inevitably, to the progression towards populist asset confiscation that will occur during the lead up, during, before, after, all these things of the monetary system reset. And the elite class, the very small subset of what is generally thought of as the upper class of society, sees the writing on the wall here, right? And they're acting upon this by trying to extract as much as they possibly can before it happens. Nothing stops this train. As more increasingly worth less dollars are created, they will flow into assets to attempt to escape devaluation. There is and will continue to be a mad dash to make a bag, head for the exits, and then slam it all into hard assets, specifically bearer assets, like we have already seen. That's why gold is doing what it is. That's why Bitcoin is doing what it is too. This is all to attempt to survive and perhaps even thrive on the other side of the monetary system that will be in place as we move into the post-human age of society, as we move through the intelligence revolution that is currently happening right now, whereby AI will create a post-human labor economy. There will be a new monetary system associated with this, because just like every other time that has occurred in history, when a new economic base emerges to be competed over, so too does a superstructure that is put in place over that economic base. And a key part of that superstructure is the monetary system. Okay, and I think we will leave that there for now and table a bunch of those other discussions for another day. Look, I seriously, this isn't meant to scare you or be alarmist or doomery or anything like that. Doesn't have to be like that. As I said, I really don't think this is something that happens tomorrow or all that suddenly or necessarily all that catastrophically. But I do think that this is a train and it only runs in one direction. I do think that this will impact much of my adult life. But what do I know? I'm just pixels on your screen talking about fake internet money.